All right, welcome to another episode of The Accidental Landlord. Today we have Danaus Chang, who is with awning.com. So Danaus, welcome to the show.
Hi, yeah, excited to be here. Thank you.
Yeah, we're excited to have you here too. We're gonna be talking about the sexiest topic ever in real estate investing, maintenance, which I'm sure you woke up this morning and you couldn't wait to get on the show to talk about maintenance. But maintenance is a struggle, and it's getting more expensive, harder to do. There's so much nuance to it, and I say that sarcastically, but I am actually excited about talking about this because this is a pain point for people, and it's not getting any better. In fact, I'd argue it's getting worse. So, yeah. But before we get too far down that rabbit hole, why don't you take a minute to introduce yourself, what company you're with, kind of a little bit, so our listeners have a point of reference for who you are and kind of what you're about.
Yeah, first, Peter, thank you. You pronounced my name correctly. So again, I'm Danaus Chang. Quick little background about me. I'm actually based out of Dallas-Fort Worth, Texas. My parents ended up immigrating here, Chinese heritage, China, Taiwan, to Fort Worth, Texas. And basically, my dad had a scholarship through some program to TCU. Not sure. I think a lot of people have heard of the football team that the university has. But basically, ended up in Fort Worth, born here. My parents started. They became accidental landlords. They bought their first property, came from humble beginnings, saved up as much as they could, bought a property. And then I'd say about a year later, they ended up seeing another property down the street that essentially was a lower price and better. So they figured out a way to buy that and ended up keeping that other property and then renting it out. And so that's where I grew up around. So a lot of my background is self-management, property management, but also investing in single-family rental properties. Quick little background about my career, ended up going to University of Texas in Austin and graduating from there, worked at a couple of internal consulting type of opportunities, specifically in the home building industry, both Pulte and Lennar. But then after the past, I'd say the last dozen years or so, I've really been focused on early stage technology startups. I'm currently part of a company called Awning, and it's awning.com, like the awning. AWNING. And the main focus here is essentially taking a lot of the challenges I've had as an investor myself and the challenges my family has had and trying to make buying a rental property easy. And then with that, being able to match it up with a lot of different resources, such as free calculators, and even recommendations for property management, and a number of different other services as well. So I'm a startup founder, but also a rental property investor / landlord.
Gotcha. There's a lot there, and I think you are going to bring an interesting point of view. So the fact that you've been in the trenches, if you will, with your parents and managing some properties yourself, and you have some professional experience with arguably like large builders, developers, Lennar, those types of people. And what else I like, and that's why we're excited to have you on the show, is you now have this like ecosystem, awning.com, where you essentially are helping investors, connecting them to resources, education, all that stuff. So all that stuff kind of tracks with what we're all about. Like the whole purpose of the podcast is to educate our listeners and turn them into more professional investors, if you will. So excited to jump into the conversation. I know that we kind of tagged maintenance as our topic today because it is such a pain point, and I'm interested in your perspective, from the developer role that you had, how that all intertwined. So let's just kind of define the problem. So we're both talking about the same thing. I'll give you my, layman's version of it, and you probably have a much more technical, in-depth version of it, which is good. But essentially, stuff is getting more expensive, like whether it's materials, the labor, the rates that you pay for labor, and it is squeezing the small mom and pop landlord because the stuff is more expensive. Because if you're investing in the last couple of years, we're not seeing in context. We're in Southern California, which is not a traditionally cash flow investment type of a market. So the margins are already thin. You're already potentially having some negative cash flow, but it's just getting worse with stuff getting more and more expensive. We can get granular and talk about like, hey, how much does it cost to replace a toilet or things like that. But that's the problem in my mind, is as stuff goes up in cost, as prices go up, it's squeezing the mom and pop landlord, and what to do about it. That's kind of the gist of the conversation, but that's the problem. So why don't you take a minute and kind of define it on your end, just so I kind of know where you're at.
And you're talking about the my understanding of how the problem affects me, or just in general?
Just just the problem of the maintenance, the rising cost, the rising labor, all that stuff, and what it's doing to your average real estate landlord investor type.
Oh, yeah. It's kind of this interesting balance, because for a while, so everything we talk about, at least over the past few years, is all related to COVID, right? So a lot has changed. COVID had a huge impact on a number of different types of businesses, but specifically on real estate. And I recall, because we were just starting awning at the time, it was a perfect time to start it. Also, it was January 2020. Ended up getting some little bit of startup capital and some investment space, essentially office space. And then we were living in San Francisco at the time, and that's where the office was. And then basically COVID kind of shut things down just a few months later, and we had no idea what to focus on and what we were going to do in building the company. And what we ended up actually starting to transition to as things started to evolve around COVID and the impact, was single family rentals. And a lot of that came from me seeing some opportunities with some of my own portfolio of properties. But also that was just a big, massive opportunity, because we started seeing that there was increases in demand for more space. And with that, we saw actually like rental rates starting to increase, as everybody probably knows. With that, though, we saw the maintenance and expenses starting to increase as well. And, for me, I wouldn't call myself cheap, but I call myself thrifty and value oriented. And I've always not taken the first problem and just say, okay, here's the cost associated with it, and let's go walk away. I'm always going to challenge it and try to get multiple bids and try to say, is there a different way to do this? Does it have to be this kind of highest cost way of solving it? And gosh, that whole mentality was put to the test over the past couple of years, and it continues to do so. So specifically as it impacts me, and again, what I've seen is, it's very clear that maintenance costs has increased. Started to see some of this in material costs over the past couple of years. We'll probably talk a little bit about wood, lumber, and how crazy prices I was getting quotes on for fixing a fence was literally double. And I'm like, wait a second, this is not like in my days 20 years ago, it was this. It was no, literally a year ago, 2 years ago, 3 years ago, it was half that price and half the quote. And so I definitely have seen an increase in my maintenance expenses. But with that, I have also, held on to some of these properties and have seen some nice increases in rent to go hand in hand. But that still, has an impact, and there's still pain when I see the maintenance costs both increase, but the time to do it and find the right people, that increasing as well.
What do you think obviously I think everybody can understand inflation, it's a pretty simple concept to understand, but where do you think the increase in just the material, what's the reason for the increase in materials? Because I would argue okay, we have 8% inflation. Well, prices aren't going up 8%. Material prices are doubling, tripling, crazy increases. What's your take on that? What do you think the reasoning behind that is?
There's some clear macro impacts that COVID had on supply chain. And I think that that was one of the bigger issues. Basically, there were problems being able to keep up with the supply and the manufacturing and the processing and such of a number of these types of materials, all while demand was actually increasing. So it makes a lot of sense when like supply has decreased and demand has increased at the same time as more people are buying more properties and such, that created this like huge issue. But then with that, it always, as far as like prices decreasing, I think in general, we've seen some things go down, some like lumber, but there's still a lot of things that stuck that were much higher. And I think there's a number of other things that kind of go into this as the supply chain started to get corrected. Demand was still high, and there's a little bit of a lag here as like demand decreases, mortgage interest rates increase. There's still a number of properties being built, home builders out there building, which essentially have eaten up a lot of the material supply out there, and even labor as well. And so I think there's still this like lag effect of that, where supply still seems to be a little bit low. It's not as low as before, but lower in terms of like materials, and then demand still somewhat kind of being there. Maybe it's decreasing some, but the construction's still happening, and then all the maintenance stuff that us as landlords are dealing with, that just is happening everywhere. And then you add on to that the number of institutions that started getting into the SFR space. They started eating up more as well. So yeah. I think there's a number of things hitting it.
Yeah, I don't think it's everyone points to inflation because it's easy, but the law of supply and demand, like I think that plays a bigger factor in the increases that we're seeing. It's not just the inflation. And that is what it is, right? That just makes everything more difficult for people, but that's the open market doing what the open market does, which, I'm a big believer in. Sometimes stuff just needs to shake out. Like you start trying to manipulate it, and you start to have unintended consequences that are different than anything related to the problem you tried to solve in the first place, type of a thing. Okay, so interesting perspective. You said something before we started talking about supply demand stuff that I wanted to get back to. You didn't call yourself cheap. You called yourself thrifty and value oriented. So I want to get into what that means and what the cost of that is. Sometimes I think it's really good. I think there's also sometimes where it's not so good. And I think this is important for especially a newer accidental landlord to understand, because it's okay if you intentionally go into something, assessing the risk and understanding what they are, and then taking a course of action anyway, right? I think it's probably less okay if you just arbitrarily are cheap and at all costs the cheapest thing rules, right? And I highly doubt that that's what you're doing. That would be one extreme, but you're clearly a smart guy. You've clearly thought about how to present that side of you. So I just want to get more into that, because this is something we see because we deal with landlords on a regular basis, and I think there are some nuances to it. But yeah, why don't you expand on that if you don't mind?
Yeah. So from a personal perspective, not to get too deep into this, I've kind of changed my perspective after seeing the downside of actually being cheap. I think I wouldn't say I'm cheap in, overall, but there are probably some aspects of me that I have some anxiety about trying to squeeze out the most profit I can. And that's just kind of the mindset of an investor. But also just feeling like, I don't think that's worth it. That's a lot to spend. And just there's some psychology of some of that spend. And so I think back in the days when I didn't really understand the impact of like being cheap in certain areas of investing in a property and the maintenance associated with that, I think cutting corners, sometimes it works out, but a lot of times it doesn't. And the first time it doesn't work out, you learn your lesson. So what I think I'm doing right now is I'm essentially optimizing towards what's the most value I'm getting out of this. So for example, One of my first properties that I stumbled upon, it was just like a basic property in Austin, Texas, and this is before Austin heated up and such. It was a basic single family property. I actually lived in it, and then ultimately ended up renting it out at some point. And if you looked at the carpeting, because it had carpets, I looked at it and I was like, oh, this carpet is fine. Let's just kind of just keep that there. Ended up getting a tenant in there, and then I think they were there for about a couple of years, and then they moved out. And then I looked at the carpet again, and I was like, it might need to be replaced. Like, well, how much is that going to cost? And I think had some thousands of dollars associated with that. And I basically asked somebody to help kind of clean it and get it in a good spot. And one, it was harder to rent out because it didn't show as well, and I didn't really think about that. So that was one thing I learned from that. But the other part about that is somebody else ended up renting it with the carpet and finally got someone in. And I don't know, they brought a dog in there. The dog started ripping up the carpet. They didn't really tell me. They ended up leaving, in a short amount of time. And then I went into the place and the whole carpet was ripped up and everything else was kind of messed up associated with that. And so this story gets even worse. I basically ended up buying more carpet because that was the cheaper option to kind of replace it. And let's just say that whole cycle happened again until I finally was like, okay, I'm going to get some hard, I think at the time I ended up getting vinyl, but it was like something that cost more, but could handle the wear and tear. And had I just done that at the very beginning, I wouldn't have dealt with all the issues that came along with that. And so, there's lots of lessons to be learned there. I have a few I can kind of share that's a little more anecdotal, but that's what I've learned because, looking back, I wasted a lot of time in trying to save some money where I could have probably rented out that property a lot faster. And then at the end of the day, I kept on putting Band-Aids on it. And had I just invested the money up front, that would have really helped.
Yeah, I mean, there's a lot of lessons to be learned there, and what you're talking about is very common, and I think people generally, hopefully, only learn that lesson, once or twice before they start to make some changes. Although there are people who do the same thing over and over again, and then they expect a different outcome. But the problem is that the property attracts a tenant, and if it attracts the wrong tenant, then it's literally like this cycle of terribleness that just keeps going over and over and over again. It's almost like you have to stop the attraction of the tenants that you don't want and do whatever is necessary to attract the tenants that you do want. And everybody can kind of put themselves in the shoes. You want to live in a place that's nice, new, current, those types of things, and those people generally value those things more, and usually, not always, because there's always exceptions, take better care of the property, pay the rent on time, stay longer, those types of things. So if someone goes, oh, the carpet is really bad here, I'll take it anyway. I got a dog. I don't really care. They're going to treat the place accordingly. Exactly the same experience that you had, which I think is a perfect example of a time when maybe investing a little up front, even though it's going to hurt your pocketbook in the short term, it's really going to help you out in the long term. I think that is quintessential, not problem, but like the difference between a professional investor. Actually, that's probably not. So an investor typically is driven by ROI, a spreadsheet, what they see, when they're doing all this analysis on a deal. And an accidental landlord is not so much like that. They're more emotional. They're obviously not. They're not the same in any way, shape, or form. But the struggle that I have with a professional investor is sometimes they get so zoned in on this spreadsheet that they can't see the bigger picture, because sometimes it's better to spend more money up front than it is to not. And your story is a perfect example of that. And that can be a trap. But at the same time, there is another side of this, which is you just blow all the money and spend indiscriminately. And that's really bad too, because you're never going to get a return on your investment. You're going to constantly, be underwater. So finding the balance is the hard part. And I think the investors who have the most success have figured out a balance. And it's interesting to hear them talk about it. And they definitely lean towards more towards get it done right the first time, set yourself up for the least amount of headaches, because having fewer headaches is of value. It might not be cash flow in your pocket, but it definitely has the ability to improve your life versus if you just have nothing but terrible tenants and fights and evictions and horrible experience. That makes your life terrible, not good. So anyway, I feel like I'm rambling now, but what are your thoughts on that?
Yeah, no, 100%. I again feel like I'm in a much better spot now with more experience. And I guess that happens after some years and a few decades or so. But that being said, I still struggle with adapting to, some of these changes because, I finally got to the mindset of like, okay, I'm going to go, I'm no longer putting carpet into any of these rental properties. I'm going to spend the money and go deal and, put in some harder, hard lasting flooring and such. But then COVID hits, prices start to increase. And one of the examples was like fencing. I've got some properties in some units in California and in Dallas-Fort Worth area and some other parts of Texas. And just even like literally like a month ago, I got a quote on some fencing that basically some old fence finally like fell down and we need to go replace that. And I don't remember the exact cost, but it was like big enough where I was like, damn, that was expensive. That's a lot. And so I tried to get multiple quotes. And then I finally realized, oh, yeah, lumber prices are still high. It's come down some, but it's still higher. And I struggled for, longer than I should have to like think about making that decision to hurry up and go fix it. So that's one of the things I think in general, you'll start to learn some of these lessons, but the environment, the macroeconomic environment, and just trends in general continue to change. So I had to kind of go back to my mindset and say, hey, this is analogous to the whole carpet thing. Just fast forward, 15 years in a different environment. And then I made the decision.
But it doesn't take away from the fact that it's difficult. And if you have margins that are thin, which I don't know if you did or not, It sounds like you bought time ago, which is to your advantage.
But if you just bought property taxes in Texas increased. California, got some caps.
Yeah.
And so, costs have increased. So
yeah, I let's talk about property tax. So I have some property in Texas, and it blows my mind, the property taxes. They're like 3% and they go up every year. And I'm like, okay, so there's some good things about Texas, but there's also some really bad things. Taxes, property taxes being one of them. But I think people think California, they think high taxes, but we also have Prop 13, which keeps our property taxes really low, which is of value. But let's talk about, so materials, I think is I think the good news about all of these things, we're not talking about super complex economic theories that you need a PhD in economics to understand. But the materials is one side of it, like wood and the example you used. The other side of it is the labor that goes into it. And I have an interesting perspective because we also own a contracting company and we have in-house labor. So I'm very familiar with the relationship between the cost of labor and what you have to charge. But what's your take on why the labor is going up so high? I mean, what's your take on that?
Yeah. I was talking to a couple of other friends that mix of accidental landlords and a little more professional. And some of this is more just kind of seeing the general trends. So I won't reference like clear data points. But specifically, I think that, the first thing I talked about with the whole supply and demand dynamic, I think that ended up, there's still carryover with that and having some impact. If I were to go a little bit deeper into more institutional investors and such have gotten into the single family space. That has kind of taken up a unique labor force that essentially is working with some of these institutions and doing less work with like the individual type of investor. And so therefore the supply is a little bit lower there. I also think that there's some interesting dynamics that play a little bit into the skilled labor, shortage post-COVID. Inflation has increased, and folks are looking for different types of opportunities and exploring other types of opportunities than that they typically would. We've seen some of the stuff where there's still challenges in the hospitality industry. This is a little bit different and from the skilled labor side, but I think there's some dynamics that play there. And then a thing I don't feel like I have enough experience to go too detailed in this, but I know that my parents immigrated here. I'm part of that type of heritage and story, and with increased immigration policies and such, I think it'd be naive to ignore that and its impact on skilled labors and certain skilled labor opportunities in certain regions of the country as well.
Mm-hmm. Yeah, I think I didn't really it's not the top front of mind what you were saying about institutional players that are sucking up basically a lot of the labor and bringing it in-house, but that makes sense. I mean, especially in areas where the big players are Invitation Homes, those types of companies, that because there's not a lot of people that are going into the trades, and it's not, if you're a mom and pop landlord, you're generally not hiring framers, electricians, like these specialty trades. You're looking for a handyman who can come in and change a faucet or unclog a drain or that type of work. And there is not a bunch of people that are knocking the door down trying to get jobs doing that. So I think that has something to do with it. The other thing I think is because prices are going up, because everybody's mindset has kind of shifted, that they know it's really expensive to build a house. They know the lumber is expensive, but the good contractors, the good skilled labor, they're going after those bigger ticket items. And that's where they're focusing their time, not on you who own 2 rental properties and you need to change the tile in the bathroom floor that's like 5 by 5. Like, they don't want to waste their time with that. They want to go do the $200,000-$300,000 job that they know they can get all day long because there's a shortage of labor. I think that's a big part of it too. And I don't know what the solution is here. I think whoever solves this labor crunch shortage issue will be a billionaire for sure, because motivating people to get into these old-fashioned trades is not going well for people.
Yeah, I mean, I have to say I've got a little bit of a bias when it comes to efficiency and technology. Since I got my own, technology startup, but I've been in tech for some years now, and I think that there is a lot of opportunity to leverage technology to create more efficiency, and then with that more efficiency, just more opportunity in general that could basically empower an individual that is a handyman or a laborer, kind of a skilled labor force, where they're spending a lot of this time coordinating their own appointments and such. And, there's a lot of software out there as that starts to become more highly used in more antiquated industries, which I think real estate's come a long way, but compared to other industries, it's still behind. But as that starts to get adopted more, I think it's going to create more efficiency, and basically a handyman should be able to take on more jobs because they're not spending so much time on the administrative side. But, I think we still have some years before we see that part catching up. But I think that that's going to help. And then, let's see what happens with, this cut in inflation, and see if things start to, decrease a little bit and starts to bring in some more opportunities, because the individual, like handyman in general, they need to charge more to keep up with their own individual costs that they have to deal with, just life. And if that can't be maintained in the right type of way, it's going to attract less and less people.
Yeah, well, I agree with you completely. I think what's interesting to talk about is, because you come from the tech background, and there's a lot of prop tech companies that are like targeting real estate, targeting construction. Like, feel like prop tech like finds a niche and then they like try to go all in and solve some of the challenges that are there.
Yeah.
In my mind, if you have an operator, say a handyman or whatever trade you want to pick, and they understand the value of deploying technology, introducing automation into their business, my argument is if they can see that big picture, these are usually the people that are ambitiously trying to grow their company and chasing the bigger jobs where they can get the better returns. The people that are left behind are a labor force that's a little bit older, that's a little afraid of technology. And I know this just from our experience hiring people to do this type of work on our properties. They're the ones left behind, and they're afraid of it. And I think this will change as years go by and some of these older generations are cycled out of the workforce. But I think it's like perpetuating the problem currently, because the people that do adopt it, they're usually leaving and going for the higher paying trades work. The people that are left behind are like, I don't want anything to do with that computer or the iPhone. They're like way behind the time. So it's an interesting dichotomy, is like how we can take technology and automation and solve some of these problems. I just don't see it. We're not there yet, from my perspective anyway.
Yeah, we're not there yet, especially, and I when we start to think about the baby boomer generation, that many are accidental landlords, and a lot of things have changed. And I think about my parents, who essentially are in their 80s, and they still self-manage some of their properties themselves. And I'm trying to help them and introduce technology. And there's still a big gap associated with it. But that being said, they have adopted the idea of using Zillow to go publicize their property for rent, and starting to see, hey, is there a different way to find another handyman or a different person to help me? And that's when I kind of explain there's other marketplaces online versus just the classified ads from 30 years ago, and introduced to some things. And in many cases, I'm trying to be a bridge as well and help them to just find it, because with technology, you can find things a lot of pretty fast. And I actually really love the marketplaces that are out there. The Thumbtacks of the world and such, where you can literally get online, find somebody, and click a button and source it that way. Check reviews. There's another, and I'm not associated with this company, but I love the idea, since I kind of had something similar. But it's called Honey Homes. And, it's less real estate investor focused, but they created a service that basically is a subscription service to a handyman that can do, kind of ongoing maintenance for a property. And what's interesting about, a concept like that is it's taking the scale of an Invitation Homes that is basically saying, we're so efficient, we have so many properties that we can keep people busy, full time, and really squeeze out a lot of ROI around that, and trying to say, how can we use technology to help the individuals out there and try to get some scale with the the service and the labor associated with that.
I'm optimistic about what's coming, and the reality is whether we bridge this gap now or we don't bridge the gap at all, the gap's getting bridged, because people in their 80s or in their 70s who are still working, or 60s, they're not going to continue to be working 30 years from now. It's just, frankly, we all die at some point, right? So that there is going to be a turnover, and we see this in our own business, because we're in a really expensive Southern California market, and the people who own the majority of the rental properties are older, because they were buying these properties in the 70s and the 80s when they were affordable. Now they're no longer affordable to regular people, if you will, but they're turning over. And our company is tech forward. We utilize a lot of, technology, automation, modern current things. Well, we are not appealing to those people who bought their properties in the 70s and 80s. But guess who we are appealing to? Their kids. And
Yes.
as they cycle out, which is just naturally happening, whether they retire or pass away, the people coming behind them, usually their children, are being attracted to companies like ours. So I feel like this, in a lot of ways, this problem is going to self-correct. It's going to take a little while. It's not going to be overnight, but we're not going to be having these conversations about the value of Zillow and helping you advertise your rental property 30 years from now, right? Like, I don't think that's going to be a thing. It's going to be something else, something way more cooler and more advanced. But the classifieds, no one's going to be, even the people that were putting ads in classifieds, they're not going to be around. Neither are the classifieds, more than likely. But so I'm optimistic about a lot of this stuff changing, but it is interesting to talk about it and how it impacts, how people manage a property or what the issues that people are facing. I want to talk a little bit about awning.com because I like the fact that it's a resource. You're giving resources to people. Like, what do you find the most, like, where do you see the most demand from do you call them customers? Do you call them member? What do you call the people that use your service?
Yeah. I think in the technology sense, it could be users all the way to owners and landlords, investors and such.
Gotcha.
But the thing that makes this unique and different than, say, Zillow, for example, is Zillow attracts broader consumers, home buyers and such, where ours is more on the landlord and investor kind of focused there. And there's a couple of interesting segments if we were to think about the types of properties and how you want to rent it out, that we started to adjust the company to fit those trends. And so when back in the days, the only option really was long-term rental. And you're really focused on the annual, sign a 1-year lease and let's hope they keep going with that. Hopefully set it and forget it. But we're realizing in this maintenance discussion that it's not always the case. But then, everybody's familiar with Airbnbs and such. That short-term rental type of opportunity, we saw a big spike in demand over the past couple of years. So from the perspective of awning, we started adding some new features and the ability to look at your property and the potential income from that, and decide if the return is better for long-term rental or short-term rental. And then another trend we're seeing right now is this world of mid-term rentals. So we're talking, if you were to define long-term rental, let's call that leases of a year minimum. If we talk about short-term rental, it's typically like under 30 days, could even be one night and such. And then this mid-term rental, which has surfaced a little bit from a number of use cases and demand of like somebody, they're like, hey, I'm building my new house and that's going to take 4 months. I don't need a year-long lease. I also don't want to stay in a hotel. And we're starting to see some more opportunity there. But one of the different trends on those cases are furnished versus unfurnished. And then along with that, there's impact of wear and tear of the type of person that would end up using that. And so that relates back to maintenance costs as well. So you're kind of balancing out overall revenue, rent that's kind of coming in versus the expense associated with that. And yeah, we're seeing a lot of that discussion, and we're building right products and tools from Awning's perspective there.
What are your users most hungry for that like surprises you? Like, oh, really? There's people that are interested in this, or there's demand for this particular topic or subject. Like, what kind of surprised you about your customers?
So when we first started our company, we were really oriented around helping an individual identify and buy a great rental property. And it was like definitely a lot more on the long-term rental focus. And that's what happened. So as interest rates started to increase and mortgage rates, literally doubled and maybe even did more than that, 250% or so. Demand for that started going down. And so, I'm even putting on my own experience in my own hat, and started to see, okay, there's not a whole lot of opportunity on the return side there. It's eating into the returns there. So what can I do to help lower some of my expenses and some of my costs? So we saw more people try to identify and say, hey, can I potentially take long-term rental and turn that into short-term rental? So that's where we started providing more data and tools, free tools also, to see how much they can get for a short-term rental, and then matching them up with a property management service for short-term rental. What we're also now starting to see is the demand there is still high, but some that have tried out short-term rental want to go back to long-term rental. So we're starting to see a little bit of a shift to that as well. And so what we're trying to do right now is basically give anybody opportunity and educate them to see, if you did want to consider buying a property, we have the resource there. But also, if you want that property to be managed or have access to different types of insurance, let's match you up with the best opportunity there, or the best property manager as well. And could that be long-term rental? Could that be short-term rental? And kind of mixing up the options.
It is interesting. You guys have a little microcosm of like the bigger picture of what's happening in real estate investing in general, and you can gauge it by where your demand is going or what people are interested in or responding to. But that tracks with, I think, what my understanding is like people went crazy for short-term rentals during COVID, and then that waned off, and now a lot of those people are going back the other way, and we're seeing that in our market and some of the other markets that I have properties in. But very interesting. Danaus, it's been a great conversation. If our listeners want to keep tabs on you or see what you're up to, what's the best way for them to do that?
Feel free to visit awning.com if you want to see just kind of some of the stuff that I talked about. But as far as reaching out, feel free. I'm on LinkedIn, pretty active under Danaus, Danaus. And feel free to connect over there. And I'm always looking forward to just networking and meeting other individual investors. And I like to trade notes myself. So love to do that, and love to talk technology as well.
Awesome. Thank you for coming on the show. It was insightful, and I like your perspective, and thanks for sharing.
All right. Thanks so much, Peter.